We're going to be bringing you a new video today. What's going on is Will here with Flow Trade Effects. Today I'm going to be doing a breakdown video of a few trades that I took yesterday, which was April the 26th. On the screen beside me, you should see a few different trading results here. You'll see the Euro CHF, and then you'll see the USD CHF as well. The Euro CHF was more of my typical planned out kind of trade, and it kind of worked out. And then the USD CHF I actually found along with this trade like around the same session, but this was more of a on the fly kind of trade. Now I don't typically take those kinds of trades, but for this scenario it actually worked out, and I'm gonna just break them both down for the sake of it. So guys, bear with me. I am gonna minimize my face a little bit. Oops. All right, cool. That should do it. And I have the Euro Swiss franc right here. That's the first trade, so we'll go over that chart first. I entered around 102446, and then I exited for 102196. Now, let's see. When I break that down on the chart here, that equates to me getting in roughly around this level here. Let's see. So I got in here, and then I did place a stop loss for that trade. As I mentioned, it was more of my conventional kind of planned out trades. I just so happened that that was the timing that I was around for the market. So I found this entry and it lined up with the price action. If you watch my price action video that I just uploaded previously, it'll go kind of in depth on how I usually follow the market and interpret market opportunities. Now, um, depending on what your timing is for the market, obviously you may be able to catch some of these highs, and you know that works out great for you. But if you're simply not available to catch that high, then you got to be able to use your market understanding to be able to make wise decisions that fit your market timing, as opposed to feeling like you have to always chase the market. The market will always be there. So this is just kind of my approach to it. I don't really chase the market, and especially if I'm not available to it, I definitely don't wish that. I definitely, like, obviously who doesn't want to get more profits, but at the same time I don't look at it as a negative, like, oh wow, I missed out. Like, you didn't miss out because you weren't available. So anyways, with that being said, um this one I did have a stop loss at 1.02595, which puts me at about here. So I put a stop roughly a pip above this area right here, knowing that if price was going to break this based on price action, that it was going to ultimately head all the way up here. And this is just my next level, where this level, um, according to price action, this is the level I base my trade off of. So I guess I'll mark this here. I'm sorry, that line is terrible. I guess I should try to trace the box that my head is floating in. All right, so if you see here, that level lines up really nicely with my ultimate like profit area, or with my ultimate entry area, because price went on a nice rally, and it just so happened that that large momentum bar stopped around the same level that it had stopped out at yesterday. Was it going to be a double bottom where price was going to bounce away and continue back up? It's very possible. But I knew that based on price action, this was already starting to form some more harmonic type of levels, where you have a high here, a low here, a lower high here, a lower low here, uh, a lower high here. I'm thinking perhaps, we may be able to get a lower low here. I didn't mention either this level or this level because it's relatively insignificant. It happens between both of these, so it wasn't significant. It didn't break or negate either the low or high structure that was previously in place. So it ultimately, I'm not going to say it doesn't matter, but as you can tell, it canceled each other out as a move. It was just a way of price either accumulating or going stagnant because it was just not moving and not volatile at that moment. But that's not my point, and I'm not here to talk much on that. This is kind of a breakdown. So as you could tell, as price came here, it didn't necessarily bounce. It attempted to bounce, in which it failed to even break past the previous candle. The previous candle is relatively large and it has a very full body. I would call that an anchor candle. So that kind of anchored the chart and price down here. It would take a large momentum to break and pull that anchor up. And that's exactly why I figured, you know what, let me trade based on this level. If price continues to drop below this level, I'll trade this level, set my stop above this level right here, in which the next candle I did, I got my entry right here. I placed my stop a pip above this area. I was very aggressive, but I knew that if this level was going to hold, then I would be able to get away with placing a stop very closely. And if it wasn't going to hold, then I would simply take the small loss and look for further opportunities elsewhere, in which I didn't have to do that because this worked out. I ended up with about a 2-to-1 ratio, maybe about a 1.8-to-1 ratio for my reward to risk. So that ended up working out decently. And as you can see to the right here, that ultimately ended up in a profitable trade. Now, aside from this, you might see that the trade continued to pan out and it actually ended up drying here. I didn't actually have any levels to base my profit target on as far as structure, market structure goes. So for this one, I used the ADR of the day. If you guys are familiar with the ADR tool, it is very helpful in terms of when you have market situations where you don't have structure, meaning you don't have a high or you don't have a previous low, and the market is kind of just like either shooting up or dropping down and you don't have anywhere to like anticipate the market to stop at. One thing I use is the ADR, and it's very helpful in the fact that you can sometimes see past the structure what how far a market might go. So in the blind without the ADR, you might see a market high and the price just crushes it and keeps going higher, and that might have already moved 440 pips for the day. But if you have the ADR, that ADR tool might be anticipating 60 pips for the day. So just because the market crushed that 40 pip um, swing high doesn't mean it can't go another 20 pips or even 30 pips to even exceed the ADR. Now, it doesn't mean that it's absolutely going to meet the ADR either. So just because the market moves in one direction, that doesn't necessarily mean that it can't move in the other direction and still combine to make the total ADR of the day. So it's a tricky little tool, but it is cool and it is useful and it's helpful. If you guys would like me to maybe make a video about that and sometime in the future, you could definitely leave me a comment below. But for right now, I'm not really getting too much into strategy. I'm just kind of basing it about um, using it as a rational tool as to why I placed my take profit around this level right here, which was the 1.02196. So that worked out pretty decently for me, and that was a cool trade. Pretty much the end of it, right after the ADR of the day was pretty much hit, market kind of rallied back up. You'll often see that, but as you can see, based on price action, it actually ended up retracing right to this level, almost to the pip, and almost like giving another entry, but it was almost false. And then ended up actually giving you the entry here, which was about 2 or so pips, maybe 3 pips above, which would still be for the most part valid entry, but it wasn't necessarily my timing for the market, so I didn't place any entries around this level or further trade this Euro Swiss franc afterwards. What I did do was, in conjunction with that Euro CHF trade, I did also look at the USD CHF trade, or the Euro CH or the USD CHF, which I was able to get an entry for that as well. And this was the let me see. This was the trade that I took, and it was more on the fly, meaning I didn't necessarily give it too much of a breakdown, and I wasn't looking at too much of the market structure. This one was kind of based on one of my strategies. So I did enter this one based on the 0, 9, eight or the 0.95984 level, which would be yeah, this is yesterday, so roughly around here, and then the market structure had me ultimately having a stop at this level. Oops, it was at that level, so it was a relatively wide stop. I think that this was an insignificant shallow pullback. It wasn't a significant pullback, but the market did come back down and retest it. I wouldn't say an insignificant, but it did come to retest this level, and it fell actually at that level, but it pierced it significantly, maybe by like 3 or 4 pips. Nothing too dramatic, but it was a good pierce still. But it didn't ultimately get all the way down here. So that's why I was able to sustain within this trade right here. And then I didn't actually have a take profit for this trade neither. As you could tell, I actually entered and exited this trade mostly based on the quickness that the market was exhibiting at this time. I wouldn't even say the quickness, it was just, I guess I seen that the market was breaking higher and increasing in momentum towards the upside. And I knew that the ADR was pretty high towards the upside, and the market hadn't really moved much that day. So I was just waiting on the move. I knew if it were to break down, there was a little structure here, and the market was giving me signs, but we kept piercing higher and higher and printing higher bars. I actually entered this on this third bar here. And initially, I thought maybe I'd be out of this trade, but I figured, okay, I got my stop here, so if I do get stopped out, it's fine. But gladly, the market did turn around, and I ended up getting out of the market for a decent little profit. And I ended up getting out around, let's see, somewhere around this level, like this level right here. So after this 3 bar strike right here, and it pretty much broke through on that third bar, closing out, putting me in profit. I had some heavy volatility as far as these trades goes, so I didn't necessarily want to hold on too much longer, but I also knew that I made a decent percentage of the day, so I wasn't looking to get very greedy after that. Plus, it was close to the end of the market day, and I don't like to sit in front of my trades all day, but I do like to watch them. So I was pretty much done after that. This actually happened through the night. This was about 11. So 12, 1, 2, 3, 4, 5, pretty much around 5 o'clock. I was waking up and I was like, okay, bet the market pretty much reversed. It came back here and this level sustained. So I was like anticipating that the rest of the day should be pretty good. And the next day actually ended up going stagnant for several hours. I watched it for a while. I didn't actually take any other trades because I was like, all right, I'm already out of here, and I'm glad. I was actually happy that I got out of the market at this point, just based on the fact that it started going slow. And based on how many lot sizes I had, I was like, okay, cool. Like if I had been just waiting through this, it would have paid off big time. But if I had waited any longer and say the market dropped, there's always the risk. So I figured, you know what? I'm not going to give all this back to the market and go through all this again, especially if we're going to go back into a ranging market. Because if you look back right here, you could tell that we started here, came down here again, went up here, came up there twice, almost came back down here again. So that looked like it was a ranging market to me. I don't really like trading ranging markets, so I kept my profit sizes or my profit targets relatively tight. And even though my risk was relatively large for this trade, it was mostly a mental risk. I entered all these trades roughly around the same time, anticipating that the market was just breaking higher, but instead it ended up taking much longer. So I didn't actually want to take as much risk as I took. So although I these trades worked out, my breakdown is of this trade that it was like no bueno because it wasn't really followed through. And although the first trade was a small win, it was actually like my more planned out trade. This was my more like wild trade, you know. So it worked out, and that's cool. And sometimes, we'll find those opportunities, but they're not the ones that you want to pat yourself on the back too much for. Although you did use your insights that you've gained through the market and different things, these are just examples of like too many of these can make you like can inflate your head too much and make you want to go too crazy. But you know, it's in terms of the risk, those lot sizes to the account that I use, it was completely proportional. That's not dramatic. That's not my issue. It's just the fact that I had such a wide stop in comparison to my target profit. That's just a certain strategy that I've been adopting at a certain time. And it's not a perfect strategy, but it does tend to work when you use a larger stop sometimes in comparison to your profit target when your expectation for the price to move is shorter than you know anticipate. Or I wouldn't say shorter than you anticipate, but like when you expect your profit target to get hit quickly, I guess. Like it's a certain strategy that I was using at one point and I still use it, as you could tell, but it's more of an on the fly strategy where if the market structure permits it, then I like to go with it. But that's not really why. Um, that's not really what I want to get to. I want to kind of make sure that this breakdown was ultimately just helpful. You guys were able to see why I took these trades. You were able to maybe see the price action involved with taking this trade, and then being able to see that I got in here, being able to get my exit out of there, and then being able to see that, all right, perfect. This trade was valid, and we were able to, you know, get out of it, but it wasn't necessarily great. And you also do have those trades that happen where sometimes, you anticipate following your plan and you think, you know what, maybe I'm gonna just deviate. Sometimes it really does work out, but sometimes you got to remember that, hey, your plan, these trades right here, the ones that you can actually like bank on, the ones that actually make sense for you, like those are the ones you want to bet, like, you know, wait on. These right here, all these trades, although they look cool, they're just like ultimately like they can bring you down in the long run. So pay more attention to these trades, the planned out, thorough trades. Don't chase these kinds of trades. If you get a hunch and it works out and you're able to put and allocate a small amount of your profit or your account size to practice different strategies, that's fine. But always make sure you have your main strategy that's going to be able to, like, you know, that you're going to be able to work that and you're able to at least respect that so that you know that you're building good habits long term, even if you have additional other strategies that you trade within the same account that may be a little bit more risky or slightly reckless in comparison. So just, make sure you guys, maintain and keep a trading journal as well. I also showed you guys the trading journal that I have. Again, if you guys think that would be a good idea to share, go ahead and like and comment, or, message me and let me know that that's something you might be interested in. Otherwise, you guys can make your own trading journals. It's relatively simple. I also went through that in that same video. Um, yeah, this has been just a trade breakdown from 426. It is 427, 2022. So we're just going through and giving you guys this market content. This is exactly what I was. I have my results here on the right, so you can tell these are the trades that I was physically taking. And yeah, nothing too crazy. This is definitely just typical trying to get through it and making sure to track the progress along the way. So I hope you guys enjoyed this, and we will be chatting it up soon. I will check y'all later. Boop.